Welcome to TheoTrade. This is Don Kaufman. Here we are. It is December 19th, 2017. Well, a little bit of the unthinkable going on in markets this afternoon. We've got just about 3 minutes left to trade in the day, and the S&Ps are selling off a little bit, down 9. I say it's unthinkable. All right, so at this point in the afternoon, the tax plan has already passed through the House. It's going to pass over to the Senate for a little bit more of a debate this evening, possibly passed either later this evening or ultimately early tomorrow morning, which comes into Wednesday morning. The interesting aspect, though, is this does seem to be playing out a little bit into a by the rumor of this passing and ultimately selling into the news of the passage of the tax bill. Let me show you those specifically. I think what stands out to me today, and it's not so much the movement specifically in the S&Ps. And the reason I'm discounting a little bit of movement inside of the S&Ps is volume happens to be, well, extraordinarily light today. I mean, we're not even going to do close to 1 million contracts in the S&P futures, specifically, again, with about 2 minutes left to trade in the day. And there's big volume that comes in here, though. We're going to be lucky to hit right around 900,000 contracts, which is an incredibly light day. However, the big moves today happen to be inside of the bond market. And I want to point this out because this is really what kind of hammered some of the sectors inside of the S&P 500, which I'm going to show you here momentarily. Again, the bonds are down about 1.5 points. For those of you that don't necessarily read bonds, bonds trade in ticks. There are 32 ticks to a 1 point move. So if the bonds moved a point in 16 ticks, it's 1.5 points. Well, the bonds moved down about, again, 1 in 14 ticks, which is just around 1.5 points. And they are, in fact, doing that on some pretty monumental size. The bonds are trading about 300,000 contracts, which, earlier this week, all I heard, was don't worry about it. It's going to be a holiday week. It's holiday week. I have to tell you something. Does that look like holiday trade to you? Because the last 2 days, the bonds are getting rocked. The volume is anything but holiday trade out there. Okay. We're not in like monumental, like record volume. Okay. But we are at the highest volume that we have seen in any of the recent trading sessions. So when I say, all right, monumental kind of volume, it is in comparison to what you would expect for what is going to be, again, a holiday week over here. The aspect that we want to consider in the coming days is first of all, if the bonds continue to sell off, what sectors is this going to influence? Again, because the bonds getting down in and around the 150 handle again could get quite serious. Let me show you kind of the reverberation that bonds is having over to the S&Ps, and it's specifically into the sectors in the S&Ps. All right, if you're not familiar with the sectors, this happens to be the real estate sector, which it's a sector that branched off from financials a little over a year ago, and it really is comprised many of REITs. So REITs are getting absolutely hammered today. Anything with utilities is getting hammered today, or telecom. And when you start to think of like telecom, again, these are not massive sectors. Okay, there's the closing bell. These are not massive sectors. However, all right, this is a sector where you're looking at telecom, like a Verizon, for example. And if you look at something like Verizon, why is this getting hit so hard today? It's because it's a dividend play. And it's interesting to see this. These are the underlyings that you do not expect to have a drastic amount of volatility. This is an underlying, okay, that's sitting at about a 0.56 beta. And what that ultimately means is that for about a 1% move in the S&P 500, well, this product over time is supposed to move about half that, okay? However, a big move down in the bonds drives, okay, interest rates effectively higher. So the moment you start to drive some of the interest rates, the yields on the bonds higher, it makes what? Investors have more of an appetite for bonds and less of an appetite ultimately for products like Verizon. So this is something I've been warning about now for a substantial period of time where all of these underlyings that are supposedly low risk, or what they term low beta funds, okay, those are coming out of the woodwork over here. But these low beta underlyings are throwing off fairly heavy volatility. Now, granted, Verizon only moved down by about, again, 0.8%. Nevertheless, the S&P's only moved about 0.3%. So you're getting the opposite in terms of the effects of beta. Beta is, in fact, getting amplified by the movement over in the bond market. And I'm telling you, this is incredibly important. And why it's so important is many people have 401ks and they have IRAs. And you're going to find out real quick that if the interest rates, okay, start to rise, that your portfolio is going to, drastically underperform, for example, the S&P. And it's especially dividend-based portfolios. Anything that's involved in dividends, you're seeing it on the screen over here today. Anything that's involved in dividends is getting rocked today. The utilities, if you're not familiar with the utilities, maybe looking at the utilities might be more effective by looking at the ETF, which is XLU. So if you take a look at the XLU, okay, is that kind of, again, a reminder ultimately that this is a dividend sensitive and interest rate sensitive product over here. Again, these are types of moves that you just don't see inside of something like the XLU, especially in what's supposed to be, again, holiday trade, a little bit more of a quiet time in the marketplace. Now, I'm going to spin you around for a second, and we're going to look at overall volatility, because again, the official passing of this tax plan won't be to either later this evening or possibly even Wednesday morning. And if there is continuation of sell side activity, shouldn't that be priced a little bit into volatility? And instead of looking at the VIX, because quite frankly, the VIX, it's out there. And when I say it's out there, I mean the VIX is a 30-day measure, okay, of implied volatility. It's not the here and now. And if you want to see the here and now, like what's the volatility projecting for tomorrow? For that, we go over to the SPX, okay? And the reason is, listen, the SPX is where the VIX is being measured from anyway, right? I mean, the VIX is the S&P 500 volatility index. So why bother looking at the VIX if you want to know what the volatility is going to be for, well, for example, tomorrow? And the reason I'm looking at this is, interestingly enough, the volatility, ironically, has increased ever so slightly from yesterday. In fact, there's a great way to display this specifically here on thinkorswim. What I'm doing is I'm actually looking at, well, yesterday. All right, so today's the 19th. We're looking at the close of the 18th. And on the close of the 18th, you can see the volatility was about 7.58 with about a $13 expected move. Okay, the interesting aspect, a full day has gone by. The volatility has increased ever so slightly, but the expected move is still about $11.55. So if you're not too comfortable looking at volatility and be like, oh yeah, 7.85, I know what that means. Okay, put that aside for a second. Tomorrow's trading session, okay, is looking for in and around an $11.50 move. Now, that is, again, it's by no means extraordinary, but it does help you kind of gauge risk and expectation, right, in tomorrow's trading session. Now, if this was drastically higher, all right, risk is coming, but quite frankly, people, we just haven't seen a tremendous amount of risk to overall markets, okay? Last but not least, the Nasdaq. The Nasdaq closed, okay, pretty much square on what we term here the roundy. The roundy is 6,500 even. Now, neither here nor there, right? But closing under 6,500 would have been a little bit more of a sell side activity signal to many of you that do, okay, trade in and around the Nasdaq. Closing on 6,500 leaves us in an incredibly ambiguous area. Now, again, most people have this feeling that the marketplace, that's it, it's done for the year, stick a fork in it. There's 7 trading sessions left in the year, okay? And I caution you, never get off your guard. There's still a lot of legislative process to play out in the next 24 hours, okay? And there's still a few more trading sessions. Now, granted, by Friday of this week, I assume that most of the volatility would have subsided. So we want to look obviously towards what? Tomorrow, which is Wednesday, Thursday, for a little additional volatility. And really, even into the week, again, just after Christmas, happy holidays, everybody, but just after Christmas, you can still see, okay, some portfolio positioning, okay? And ultimately, you have to ask if there's going to be any tax selling, okay, associated with, again, the tax bill that has come out has left us also in kind of a precarious position over here. A lot to think about, okay, as this tax bill ultimately passes, all politics aside. At this point in time, it's just accepting how we as traders and investors are ultimately going to be influenced by this bill. Thanks everybody here for joining us at TheoTrade. Have a wonderful evening. Bye-bye.